But, you know, they're going to be expensive storms, Harvey. And already the first tranche of aid is out there, the $15 billion relief that included a little for Irma victims ahead of the fact. But they're obviously going to need a lot more. The president's saying the money is there, so they're going to be follow-up votes to get that funding. As we're debating tax cuts, and the president surprising a lot of folks late yesterday, maybe not you, but some who were stunned to hear that the wealthy will not be included in those breaks so far. What do you make of all that?
Well, what the president has said so far is that we need to have a set of federal government policies that encourage growth. And the growth, he's dealt with two parts of it. One has to do with reducing regulations, and the other has to do with revising the tax code. He's done a lot on regulations. Now he's turning his attention to the tax code. And the issue, the question that people ought to be asking is what we're going to do with the tax code, or what Congress decides to do with the tax code, will that encourage growth? Growth is critical to dealing with our fiscal mess. As you know, Neil, we spend about 20%, federal government spends about 20% of GDP and raises revenue at about 16% of GDP. And over the past 30 years, that 16% is sometimes 15, sometimes 17, but it's pretty static over that period of time. And the difference in a 1% increase in growth rate, had we had a 1% increase in growth rate over the Obama years, we would have increased federal revenues by $2.5 trillion, more or less. So if we get 1% growth over the next 10 years, federal government gets $2.5 trillion.
That's what we had this Republican congresswoman on earlier, Harvey, who was part of that group that met with the president, used that exact figure in scoring whatever the final price on these tax cuts would be. That's using dynamic accounting. You know, you get $2.5 trillion over 10 years and all that. But there's bickering back and forth as to whether Democrats would accept that and all that. Do you think this is going to be a nasty fight, even if it leaves out the wealthy to get Democratic votes?
Yes.
You do?
I do. I think the Democratic point of view is we should be raising more revenue by tax rates, not necessarily by growth. And they will argue that if we're going to reduce taxes for anybody or anything, then we need to reduce it for middle-class people and poor people. And that...
Well, you crunch the numbers. I mean, the argument is you get more bang for your buck cutting the wealthy taxes. But I don't know what the methodology history proves. Just that when we've had bipartisan tax relief in the past, whether going back to JFK or Ronald Reagan or even George W. Bush, I mean, the fact of the matter is it was across the board for everybody. Does that make a difference now? And in this environment, if the only way you can get it through in this very weird climate where you can't count on all Republicans is to do it this way, better something than nothing. What do you think of that?
Well, first, the facts. Currently, in latest years we have data, which is 2013, the top 20% of taxpayers paid 88% of federal income taxes.
Wow.
The lowest 20% actually got 4% back. I mean, it was a negative 4% contribution to taxes. So if you're going to cut individual tax rates at some point, you're going to have to cut them for the people who are paying the taxes, and that's the most wealthy. But the question policymakers ought to be asking is, which tax cuts will generate the most growth? And the tax cuts that will generate the most growth are in the corporate tax.
But if they're not cut to 15%, but it might start in the 20, 22, 23%, I know that's a lot lower than 35%, Harvey. I don't know what the allowances and deduction changes will be, but will that move the needle much?
It'll move the needle. I don't know if it'll move it enough. Corporate tax rates ought to be zero. The fact is corporations don't pay taxes. It is simply a way of collecting money for the federal government without actually having the people who are paying it pay it directly. The people who pay corporate taxes are the workers, our stockholders, and our customers. If the corporate tax rates were zero, we would have extraordinary investments in the United States, and we would have extraordinary growth.
But the fact that they could go still lower, maybe not to 15, to your point, and the market's up again into record territory, is it the market, of course, filled with all these top 1%ers? They seem to be resigned to the notion that they themselves want to get a tax cut, but if the investment and corporate rates go down, they benefit because the economy booms, their investments soar, all of that drill. Do you buy that? Because something's got to explain this market not giving up any ground.
Well, I'm in the 1%.
Really?
As are you, and as are most baseball players. and the fact of the matter is, we would all be better off as a nation. And that's really what I care about, not whether I are affected or you're affected. As a nation, we would be better off.
I'd like you to care a little bit about it.
Well, but you will share. If we have economic growth instead of 1.9%, 2.9%.
Oh, it makes all the difference in the world.
Makes all the difference. People go back to work. Our cost of running the government goes down. Confidence levels are higher.
Clearly, the financial community has come to that conclusion. I think.
Yeah. And every economist.
Yeah.
Every economist will argue we need to lower the corporate tax rate, even
Do you
the
think
Democrat.
he'll get it? With these overtures to Democrats, he seems to have found his political sea legs here. Yeah. Maybe it was the storms, maybe his handling of the storms, maybe it's meeting with Democrats, surprising people. But he seems to have got his footing, and that he will get this done.
It depends what he has to pay for it. The way Congress does its scoring, the difference between a 20% tax rate of corporations and a 15% tax rate is something like $80 billion a year. And if he has to spend that $80 billion, and it's not really spending it, but if he has to give up that $80 billion in order to lower rates for somebody else, then that means we're not going to get a bang out of that $80 billion. If we cut tax rates for the middle class, which I think tax rates ought to be down for everybody, but if we cut it for the middle class, that will not have significant economic growth implications. If we cut it for corporations...
Make them retroactive, they might. If you make them retroactive, they might, right?
No, if you make it retroactive, they already spent the money, they're not going to do anything. It won't have any... If you do it at the corporate tax level, you will, in fact, get a full bang for the buck. So I would argue that the president and Congress should stick to their guns, and if they get nothing other than a lowering of the corporate tax rate, I would argue to zero. That would be the best number, but any number below 20 is going to be better than where we are now.